So this video is dedicated to Mr. Deepak Padmule. He sent me this email on 7th of September. I was thinking of making a video on this, but since this looks like quite a detailed email, I thought let me take some time because he has mentioned the name of some stocks here and the day of the breakout. So we'll have to go back and look at all of those. So this discussion might take some time, and there are some screenshots sent here as well. So I am replying to this email very late via a video, but no problem. Let us have a discussion on this. He says, Dear Rohit sir, it's been 6 months. I am watching your positional trader playlist videos, and those are really informative and well described. I have shared your channel links to my friends and colleagues whenever I get engaged in share market discussions, and they are also appreciating your knowledge, efforts, teaching, and all. As of now, I have taken the basic subscription of TradingView and using the same for filtering the stocks, just like you explained it in one of the video, and using MarketSmith without subscription for market condition, comparative, and fundamentals. And I think that is sufficient as of now for beginners like me. Well, the answer is no, it is not sufficient. You have to take the pro version of MarketSmith. You cannot go into the market with half information. If you are using the orange trading system that I discuss, you have to use the MarketSmith Pro version because there you get the base count. You also get detailed comparative analysis. Fundamentals also you can check. There all the 12 factors that we discuss. So do not compromise on information because your decision is based on information. You need high quality information and analysis. MarketSmith provides information and analysis both. So don't try to save your cost here. This is an important expense. It is like an investment. I will come to the point by gaining the knowledge. I will come to the point by gaining the knowledge from your videos. I had found few stocks in the past. Gallant, Car Trade, Star Cements, SPIC, and now I am holding on one stock, GMDC, which got breakout on Friday, 5th September, sharing the screenshot of my setup. Let me know if this is exactly what you want to deliver. He said that he has found a few stocks, but he has not mentioned whether he has taken the trades. Okay, that is important. Now, these are old dates. So MarketSmith doesn't give us historical data. So at best, we can check technical analysis. We can go to the chart and check whether these are legitimate breakouts. So let us do it. Gallant, 20th June 2025. So let's write Gallant. So let's go to 20th June. This is what he is talking about, right? So let me put a. So this is what he saw. You see, what's the 52-week high here? This is the 52-week high. So if I draw the base here, you see the high of this bar, this candle is 484.45. The high of this is 485. So if we mark the points, point 1, point 2, point 3. Okay, so there is no point 4 here. And this is 19th of June. So there are only 3 points inside the base. And what did I discuss? What have I taught you? There should be minimum 4 points in the base. Moreover, after point 2, There is not a single candle which has closed inside the green zone. So this is not a proper base setup. Now, of course, if you move forward, the breakout has come. So he's talking about this breakout, but that's a wrong analysis. This is not a breakout, right? Of course, it has broken these resistances, but as per our system, it doesn't meet our criteria. So there is no setup available here. I'm not looking at what happened after. I'm just seeing what was the analysis done here. So this is wrong. Let me open his email. Yeah, so this, by gaining knowledge from your videos, he has not studied my videos properly. Okay. So Gallant 20th June breakout is wrong. Let's look at car trade 14th of July. Car trade, let me close this. 14th of July. Just because you are watching my videos does not mean that you understand what I am discussing here. You will have to pay attention. You will have to take notes. You will have to concentrate. Because I myself, when I was learning this, I was making a lot of mistakes. It took me a very long time to understand the concept of base counting. Extremely long time, right? So casually watching my videos is not going to help you. What I discuss on my YouTube channel is like the essence of what William O'Neill, Mark Minervini, Patrick Walker, and David Ryan talk about in their interviews. I consider all of them as my mentors. So you will see whenever I am discussing something, you will find my discussion similar to what they discuss because they are my mentors. I am discussing here with you what I have understood. Now have a look at this. He's saying that this is the breakout. And that's absolutely wrong. Okay. Have a look at this. So this is the 52-week high. So the base starts from here. Yeah. So he's saying this 14th of July, 14th of July car trade breakout. That is not, 14th of July is not the breakout. The actual breakout came here just two days before 14th of July. On 14th of July, the stock is already out of the base. Okay. Maybe on a weekly chart, you can consider that as a breakout, but not on the daily chart. On a daily chart, you get an early entry into the stock. So car trade breakout analysis is still better than Gallet. Okay. So there was a breakout here. So if I measure the points from here, point 1, and this is point 2, that would be point 3, somewhere here, point 4, point 5, point 6. Okay. And then you draw a line here. Somewhere here in these two candles, these two candles are the breakout. Okay. Either on this candle or on this candle. This is not the breakout. This is where the stock has already gone beyond the base. So if you were to look at the weekly chart of car trade, yes, then I would say that would be a breakout. But remember what I told you earlier. You can take an early entry into the daily time frame chart. Okay. So I'll remove this. I would say this was a better identification than this. And by the way, I'm not even checking red flags. I'm not doing liquidity analysis. I'm not doing comparative analysis. I'm not doing fundamental analysis. I don't even know what the market condition was at that stage. So, for example, if Gallant was fundamentally weak, and at that time, let's say the market was uptrend under pressure, then there is no point even looking at the breakout. There is no point in looking at the chart itself because when the market is in uptrend under pressure, no matter how great the base is, if the stock is fundamentally weak, we are not going to take that trade. I call those trades swing trades. Swing trades are those trades where, irrespective of fundamentals, you get in. For that, you need the market to be in a confirmed uptrend. Then Star Cement, 4th of August. Let's see. Star Cement, 4th August. So the base begins here. No, not here. The base begins here. Let's draw this. Yeah, see, if I draw the points, this is point 1, point 2, then this was point 3, point 4, maybe point 5. Okay. So high of this bar, high of this candle, that's the breakout point. So are the these two candles are the breakout candles. Now, the reason why he is mentioning that candle which has already gone outside the base is because, see, he has written here, I am watching your positional trader playlist video. Now, this positional trading playlist, it's all about the weekly charts. It is not about the daily time frame chart. That is why on car trade and Star Cement, he has identified the breakouts on the weekly time frame chart. So I am showing you daily time frame chart just to help you understand that you can take an early entry. Before even this candle, you could get into the stock. The stock gives you that uh, signal. The stock allows you to enter before this big breakout happens. Okay. Some of you might want to enter half position here and the half position later. But if you look at the weekly charts, these car trade and Star Cement are legitimate. Okay. So that's the breakout on the weekly time frame chart, because on a weekly time frame, this the high of the base is the pivot point, and above that 5% there is the range. Even Gallant, if we look at from a weekly point of view, Gallant, let's go to 20th of June. 20th of June, yeah. So he's looking at the weekly time frame chart. He's not even considering the daily time frame chart. Then his analysis is correct. If he can understand how to buy these stocks on a daily time frame chart, he can get an early entry. SPIC 20th August. SPIC 20th of August. This is 20th of August. So maybe he was looking at this base. This is too far. So this base, not a good base. This is the breakout he's talking about. Of course, he's looking at the weekly time frame. You see the time compression here, which is mentioned in Mark Minervini's book. Time compression means the stock takes a lot of time, like 2-3 weeks to come down, but in less than two candles, it traverses that entire distance. That is called as time compression. Time compression means in a very short period of time, the stock shoots up. That is not good. Okay. After time compression, you need more consolidation. If you read Mark Minervini's book properly, you will understand this is not good. You need more compression after time compression has happened. You need more contractions inside the base. In this, that did not happen. That contraction did not happen. It suddenly shot up in a very short period of time. That is why you see how many consecutive red candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Extremely painful for a person who has bought a stock in this area to see like 19 red candles in a row is like extremely painful. After every red candle, you might think now the stock might go up, now the stock will go up, now the stock would go up. No. Time compression will have its effect. The people who bought in this rally, they are all getting out here. Okay, that's what is happening behind the scenes. So you need to understand time compression as well. But good discussion. And now I'm holding on to one stock, GMDC. GMDC, 5th of September. So this is the breakout he's talking about. So you notice all of the stocks that he has mentioned. One rule he has followed is the blue, green, red. For every stock that he has mentioned, the blue, green, red are aligned. So just because you get a opportunity on the weekly doesn't mean that you buy. You have to come to the daily and see whether it meets the criteria that Mark Minervini proposed in his book, which is the 50 is above the 150 and the 150 is above the 200. Well, that will keep you safe. That will keep your portfolio safe. That will reduce the risk in your portfolio. This is also a good breakout on the weekly time frame chart. Every stock that he has sent, all breakouts came on high volume, at least on the daily time frame chart. So yeah, this is the daily time frame chart, GMDC. He has marked the daily. Okay, so 0.1, 0.2, 0.3, 0.4, 0.5. So there is no 0.6. So you can't buy at 0.4. So this marking is incorrect. There is only 0.5. There is no 0.6. The stock broke out from point number 3. So here was the buy point. Okay. Then you come to the same stock weekly time frame chart. So he has drawn the pivot point, gone up 50%. So pivot point has been drawn from inside the base. Generally, on the weekly time frame chart, the high of the base is the pivot point. Maybe on MarketSmith, this was given as a small cup with handle. I don't know. But the distance between pivot point and the total buy point should be 5%. Okay. So this is incorrect. Ideally, the pivot point is at the high of the base. From there, you go up 5%. And from the pivot point, you have 20-25% target, whatever you want. He has marked the target as well. I don't know how much percent he has calculated. Yeah, it's given here is 25%. He's calculated 25% from this level, from the high of the 5% level. That is not correct. So let's go to the weekly time frame chart. So GMDC was 5th September, right? GMDC. Let's go to 5 September. So we are talking about this breakout. Okay. So the high of this bar, which is 472.40. 472.40. That's the point. Okay. And then from there, you go up, let's say 25%. So somewhere here, draw another line there. So that's 590. That's your target. Okay. So here he has mentioned target at 632 because he's measuring 5% distance from here. So basically he's looking at, so that's the buy range. This is the buy range. This is the area in which you have to buy. And from pivot point, this is the pivot point. Okay. From here, you go up 20-25%. That is how you measure the distance. What he has done is from this, the high of this range, from here, he has gone up 25%. That is why he's probably got 632. From here, if you go up 25%, see, that's when you get levels like 620, 630. That is not correct. You have to measure from the exact pivot point. That is the high of the base. So homework for all of you, go and check these stocks on the weekly time frame chart. What will you look at? You will look at the volume, and you will look at the volume on the breakout and volume inside the base. Okay. Let's do one thing. Let me make part 2 of this video. And in part 2, we will look at the weekly time frame charts. We will analyze the base and we will see whether the breakout came on high volume or not. Okay. Thank you so much.